Thank you. Well done for making it this far, those of you who have. And I wanted to say I'm really delighted to be able to talk here. I'm not quite in my new role as Director of the Institute. One of the purposes of the Institute will be to harness the research and the political nous and experience that Professor Houston has brought to research of Patricia, and so it's wonderful to hear both of those things. And I think, as Ken Henry said, the work, the detailed empirical and economic work that Patricia presented is relevant not just in Australia, but it's actually relevant in the region, but relevant to particular countries in the region. So what I want to do and I won't take up all the time because I am interested to hear people's questions or comments, is bring it back to the region and the G20. In fact, as the last speaker, really what I want to do is come back full circle to that very important topic of Monty Python. And you might be interested to know that I was at a US roundtable on corporate tax reform a couple of weeks ago in Washington, DC, where the topic of Monty Python was also raised. The particular aspect of Monty Python that was raised in DC was the worry song. Some of you may be aware, some of you may be too young, but the particular line being, "I'm so worried about the baggage collection systems they have at Heathrow," dates to a particular time and anxiety in the 1970s, I think, about Heathrow Airport. But it's kind of a symbol for the, the challenges, the logistical and infrastructure and tax challenges of globalisation, I think, today, and the very difficult political bottlenecks that we see in taxation in the US as well as here. So one of the key things to think about, I'm moving away from the individual tax context back into the sort of corporate tax context. I won't spend a long time on each of these. I'm assuming the presentations will be made available to you at some point. But I do want to highlight in the region then some of the particular issues and challenges and maybe opportunities that arise in this area from what are these kind of larger global institutional pushes to reform and administrative development, and also that are issues on Australia's agenda internationally. So these are international or corporate tax challenges in the region: protecting the domestic company tax base, developments in cooperation in transnational administration, and moving towards potentially multilateral coordination. And they are, of course, connected. In terms of protecting the company tax base, there are issues about the importance of corporate tax revenues in the region, the fact that tax rates are trending downward. We see a large number of tax holidays and incentives. And we also see some interesting developments in terms of how companies might be in future required, multinational corporations that is, might be in future required to report on their profits and tax paid to each jurisdiction. This is a statistic about the tax to GDP ratio in the Asian region. I have to say I'm focusing mostly on Asia, part of Asia Pacific. But one of the reasons for that is of course, the substantial revenue collection and revenue systems in those countries, whereas in many Pacific jurisdictions, as we've already heard, there are very significant challenges for collecting revenue. I mean, what these numbers show, these come from the Asian Development Bank, is that the tax to GDP ratio, that idea of the level of taxation, the level of economic production going into provision of public goods, is still low. It's still very low in some jurisdictions, down at 5% of GDP. It's substantially higher in Thailand, Vietnam, but it's below 20% of GDP, so very substantially below the tax revenues being collected in, of course, European countries, in Australia, and so on, across governments. So we have to remember that revenue is a very important part of the picture. This is a rather old statistic, so it's 10 years old, so I only picked it because it had some nice colours in the charts. I'm not very good at charts, I'm a lawyer by training. The brown in these charts, this was a Treasury's international tax study from 2006, a few years ago now, and of course the data they're using is earlier than that, 2002, it's about 10 years old. But what the stats shows is that reddy brown chunk, this is the tax mix, where the tax revenues are coming from in these jurisdictions in Southeast Asia mostly. Corporate tax is still a very, at that time, very important part of the tax revenue collections in these countries, in some countries more than others. So there are a couple of 2 points here. One is that it's not the same. Talking about corporate tax collection is not necessarily the same thing as talking about the tax rate on capital, because the burden of corporate tax may fall in ways that are not well understood, but may not fall entirely on capital. However, it is important, I think, that we acknowledge that at least some of that corporate tax likely does come from capital, whether it's domestic or foreign investment, as well as from immobile activities such as mining and resources, other advantages of the market. So is tax competition a problem in the region? I think it probably is. There are mixed studies on this, but again, first point here, other taxes are inadequate to fund the public goods that are required, the investment in childcare, education, and infrastructure that is required in the region. So I think it's still important to protect that corporate tax base. It's interesting to think about ASEAN as a regional organisation and what its goals are when you're thinking about direct taxation. In ASEAN, it has this goal of attracting foreign direct investment from around the world. There is still a very significant amount of competition between member countries in ASEAN for corporate tax investment, mobile investment. So I'm not going to, not being an economist, I'm not going to answer the question, should corporate tax on mobile capital trend to zero? As a lawyer, I think the answer should be no, actually. And when I look at revenues, there is a question, though, about what is the best set of overall tax policies to generate adequate sort of productivity in the domestic context. And if all the corporate tax does is ensure that we collect some revenue from foreign investment and from individual high wealth individuals high income individuals in the jurisdiction, it's doing an important job. Okay, so one of the ways that we have very significant tax competition in the region is through tax incentives or holidays. The Asian Development Bank keeps a table. You can go onto their website and look at all the different holidays. I'm not sure how up to date it is. But countries are still not only trending down with corporate tax rates generally, but are undermining their base. And they've been doing this for decades. This is not a new phenomenon, but it still occurs. So these are regional incentives or they're industry incentives. They're easily able to be gamed by multinational enterprise. There are lots of tax planning techniques to maximise the use of exclusions from the corporate tax base. So we need to consider this sort of aspect of the corporate tax base as well as the marginal rates. Okay, so I'm going to jump to one other interesting phenomenon which we've just seen enacted in Australia, and there's an interesting question as to how this fits into global trends about transparency and potentially then whether it has some traction in the region. So the previous government enacted a law which would require for the first time the Australian Taxation Office to publicly report by company name the gross income of companies, the taxable income and the tax paid. There might be a couple of other refinements. The first tax year for which this transparency legislation would apply is the year ending 30 June 2014, that is this financial year. Then of course tax returns come in over time. It's not clear when the data would be publicly available. It's also not clear, as I understand it, whether the current government is prepared to leave this law on the books. So this was introduced as a response to, rather a lot of anxiety about the Googles and Starbucks of this world, and to a push by non-government activists globally, but in particular in Europe, for country-by-country reporting. That is to have multinational enterprises break down the profit attributable to jurisdictions and the tax paid in those jurisdictions and have that publicly reported. I think that more transparency is probably a good thing, but we need to think quite hard about what the purpose of that transparency is. If the purpose is to give citizens just generally more information and encourage more general compliance with the system, I think that's probably a good thing. I think we should not pin hopes on transparency in terms of increasing tax revenues. We're much more likely to succeed in that if we encourage revenue administrations to work more closely together. It's the tax administrations which are really doing the hard work of collecting those company tax revenue, and we need to be bolstering that facility. It may be that public transparency is also a good thing, but it won't achieve the revenue task. Okay, so these are two separate goals, if you like. It may enhance legitimacy of the system. So it will be interesting to see if Australia's initiative stands and what influence it might have in the region. So that brings me to my second topic, which is actually about transnational cooperation in administration. So this was referred to already to some extent by Michael Cunningham, the sort of automatic exchange of information developments, but also more globally, there has been a lot of work in this space. I do think that tax administrative cooperation is really the way of the future, but I also think there are some very significant challenges in the region about whether countries are going to successfully participate in this kind of cooperation, what resources that's going to take within countries, what revenues within the region are going to be successfully generated. And I think that there might well be some scepticism among governments and revenue agencies in the region about the value to those countries of participating in cooperation. So that's something that I think does need to be addressed. We sort of know the story. In 2009, the G20 announced, great fanfare, the era of secrecy is over. Well, that's not quite accurate, but certainly a lot has happened. In 2014, we now hear the new standard is automatic exchange. And of course, we're pushing forward this agenda. Now, it's certainly true that exchange of information is a really important element, but what does this mean in practice for the Asia-Pacific region? Well, we do have a growing number of tax information exchange agreements in the region, but these are not automatic exchange. These are on request, and they require very significant resources. And in fact, here is the only place in my talk where the Pacific really makes an appearance, because there are tax information exchange agreements with Pacific jurisdictions. And I would say there are very significant demands on those administrations and query the extent to which there's a real question as to who bears the cost of managing these systems. I think these systems are crucial in terms of developing globally effective and sustainable tax systems, but the question is how do we bear and manage that cost? In terms of this area, one of the key developments globally that is a really new thing that has happened is the Multilateral Convention on Mutual Assistance in Tax Matters. It's been sitting moribund for decades between the EU and the OECD. In the last 5 years, it's now achieved more than 60 signatories. It is multilateral for the first time. So historically, countries have been really rather poor at cooperating on tax matters, protecting their sovereignty rather jealously in this regard. We really are seeing the end of that time. I think we are seeing a new era in administration. The interesting issue, though, with the Multilateral Convention, there are signatories in the Asia-Pacific, but most countries in ASEAN and the Pacific are not signatories. This is, these are the countries that are currently signed up, and there's an interesting question as to why would they sign up and what benefit is in it for them. And similarly with automatic exchange of information, Michael Cunningham presented some steps, and it was kind of the third step, which is presumably at some point in the future. 40 countries, and Australia spearheading, of course, have said, yes, we've signed up to automatic exchange. That means mass computer data matching systems and then being able to unpack those systems. Not one Asian country has yet formally said that automatic exchange is something that they will sign up to. So I think we have to be mindful about how can we make this really attractive to the region. And then the last thing I want to comment on, because I do want to be able to go to hear people's views, is this idea of potentially future coordination of company tax, and this is where the base erosion profit shifting project of the OECD is relevant. That project is not, I think we heard this morning, potentially the G20 is only talking about transparency. I don't think that's what the OECD is talking about. So there's a very interesting question about the political difference in role of the G20 and then what it's prepared to say by consensus of its leading country members and what might be of broader interest. The BEPS project is not just about transparency, it's about collecting certain levels of corporate tax, right? Ensuring that some jurisdiction will actually adequately tax, in my view. And there are a number of very complex corporate tax rules that would need to be implemented within countries and potentially coordinated across countries to deal with cross-border direct investment, transfer pricing, thin capitalisation, cross-border financial instruments and general anti-avoidance rules. One of the things that did happen under the Fraser government was actually Australia's general anti-avoidance rule, significantly reformed. That got slipped under the radar, but as you heard from John Hewson, most other reforms were left for another day at that time. Most countries in the Asia-Pacific do not have substantial rules on any of these aspects. Some of them have some domestic rules, many of them are not implemented. I was at a conference in Malaysia in last November. There is widespread talk now about these rules and general anti-avoidance, but there is a really big challenge about properly implementing those. So Ken, I'd like to leave it there and yeah.
All right. Thank you.